As we look at the name of this program here today, it's called Tighter Margins, which means there's much less money to spend than we dealt with when we were looking at $6, $7 corn a couple of years ago. Crop insurance is going up in price. Why, and this is actually for both of you, but Chris, just to talk about the crop insurance, what makes it still make sense at this point when you know, as we've already defined, there's less money out there to spend when all the other bills are paid?
I'd say you got to look at everything when I look at any type of decision we're going to make in crop insurance, I like to look at a net decision, and that's kind of on these grids. What they do is at the end of the day, everything you did, what was your net position on whatever can happen? And some coverages you can spend $50, $60 an acre on, but a lot of the coverages that are even if you said I've never bought insurance, I buy cat, you can spend $15 an acre in Illinois, but lumping your corn acres together in an enterprise unit for $15, that's giving you up to 80 to 85% protection. So it's probably, some of these programs are more affordable than they've ever been, even though some of the rates have come up. Government subsidies were thrown a lot more into some of these programs a year ago.
Dan, on the option side, options aren't necessarily cheap, or they're certainly not free. Can you comment on
well, they're not, and that's probably the disadvantage. But you've got to, it's kind of like crop insurance is you're paying someone to assume a risk. You want to spread that risk off to someone else, and options is a way of doing that. And like I said, it's very easy in today's marketplace when we're looking with very skinny margins that a market can get away from you very quickly. And when we're looking at very skinny margins, we're in a market atmosphere that basically is being supply driven at the moment because we have large world supplies of just about anything that we want to basically look at on the agricultural side of the picture. A few years back, when we were making our highs in the market during 2008, it was a demand-driven market. So prices moved up to that level that basically cut back on usage. Now we're kind of on the opposite side of that equation. We're now seeking out new demand for the market because we have adequate supplies. And even though options do cost you, there's a cost involved in it, and I'm not here to say that you should market 100% of your crop that way. It's kind of as part of the basket of marketing tools that's available to farmers. Straight futures is an option. Straight cash forward sale is an option. If you're happy with that price and you can live with that market going up 50 cents or 75 cents without making you feel too bad, there is nothing wrong with a straightforward cash market. But what I'm saying here with the use of options, for this fee, it gives you a second chance at selling a higher price. And but for that second chance, it's going to cost you a certain amount of fees. And the market is different, depending upon what the volatility of the market, what the cost of these options are. But for the most part, my observation, and this is only my observation of looking at farmers that have used options in their cash contract and their marketing with the local elevator over the past couple of years, they've been very happy because it's given them a sense of downside price protection during times when markets are very bearish, but it still gives them the opportunity that if things would turn around and be much brighter than what they had planned on, that they would have that opportunity to maybe sell them at a little higher level. And we're just in an era today that we just don't know what we're going to wake up to the next morning. For those of you that do watch outside market activities, you can really see a direct correlation of the value of the dollar and how that may or may not impact commodity prices that day. Every morning when I come to work, I walk into the trading floor at 8 a.m. down in Decatur, Illinois. First thing I look at on the big board is what's the dollar doing, because by looking at the direction of the dollar, you have a pretty good sense of what's happening over on corn and soybean prices.